Welcome to the Daily Market Recap. Today is Wednesday, August 26, 2026. What a wild session on Wall Street today. Stocks traded in a fierce tug of war as investors balanced sizzling tech earnings momentum against sticky macroeconomic data. While tech bulls attempted to charge ahead on big AI anticipation, warmer than expected inflation numbers kept broader market gains in check, leaving major indices finishing mixed to modestly higher by the closing bell. Looking across the board, technology and communication services flexed their muscles to lead today's leaderboard, surging on strong semiconductor and digital media buying. On the flip side, rate-sensitive real estate and utilities took a breather as Treasury yields ticked up. Overall, 6 of the 11 S&P sectors finished in green territory, showing that buyers are still out there, just being selective. Where does market sentiment stand right now? The Fear and Greed Index is sitting comfortably at 55, placing us right in the neutral to greed zone. Traders aren't in a panic, but they're definitely keeping one foot on the brake until Federal Reserve policy direction gets crystal clear. In our headline story of the day, tech juggernaut NVIDIA blew past expectations once again. Second quarter revenue reached a staggering $96.2 billion versus the $92.1 billion expected, powered by $89 billion in data center revenue, with Q3 guidance coming in hotter than forecasted at $108 billion and a massive new AWS cloud deployment partnership announced. NVIDIA after-hours shares spiked over 4%. The AI boom is alive and kicking, folks. Coming in at number 2, July PCE inflation data arrived hotter than expected at 3.7% year over year, remaining well above the Fed's 2% target. This spicy print had traders instantly recalibrating their expectations for upcoming interest rate cuts, driving the U.S. dollar and Treasury yields higher. Everyone's eyes are now glued to Fed Chair Warsh's upcoming speech at Jackson Hole to see if the central bank will lean hawkish or hold steady. Rounding out our top news, diplomatic talks between Iran and Oman regarding shipping navigation in the Strait of Hormuz eased immediate supply blockade concerns. Crude oil prices dipped slightly as traders priced out geopolitical panic premiums, giving transportation and consumer stocks a much-needed sigh of relief. Starting off our top gainers, Abercrombie & Fitch completely exploded today, surging nearly 29%. ANF reported record Q2 sales of $1.27 billion and an eye-popping 19.9% operating margin, crushing guidance. Turns out the 90s nostalgia trend isn't slowing down anytime soon. ANF stock is practically knocking on the door of brand new 52-week highs. Next up, biotech power Biohaven soared over 13%. The catalyst BHVN scored a massive global licensing deal with SK Biopharmaceuticals worth up to $795 million for its late-stage epilepsy platform, plus locked in a $4 million trade secret legal victory alongside Yale University. Wall Street loves fresh cash and patent wins. Rounding out the winner's circle, Chinese online recruitment leader Canjun rallied big after releasing stellar earnings. The company reported a 173% jump in profits, announced an annual cash dividend of $51 per ADS, and expanded its ongoing share buyback program. Heavy cash returns to shareholders made BZ an instant crowd favorite today. Over on the downside, clinical stage biotech Generate Biomedicines cooled off, dropping sharply after hitting fresh 52-week highs earlier in the week. With a price-to-sales ratio sitting above 63, short-term traders took profits off the table despite strong insider buying. Classic buy the rumor, sell the news profit-taking. Quantum computing play D-Wave Quantum took a hit today as sentiment cooled following its recent Q2 revenue miss and executive transitions. Despite boasting a solid balance sheet with over $540 million in cash, traders are punishing the high-valuation tech stock until commercial revenue scaling catches up to the hype. Finally, social media app operator Snap slid lower as post-earnings digestion continues. While Snap showed initial stabilization in user metrics earlier this month, broader macroeconomic worries around digital ad spending are keeping buyers on the sidelines, trapping the stock in a tight, choppy range near multi-month lows. Moving into key chart levels, SPY continues to consolidate right near record highs around 565 to 568. Immediate resistance rests at 570, where sellers stepped in earlier this week. On the downside, key support holds at 560, followed by the 50-day moving average near 552. As long as SPY stays above 560, the long-term trend remains bullish. For the tech-heavy QQQ, price action is hovering near $480. Monster after-hours results from NVIDIA could push QQQ toward testing major resistance at $485 to $490 tomorrow morning. Should profit-taking take over, watch initial support at $472, with critical trendline support sitting lower around $465. Small caps in IWM are feeling the heat from elevated Treasury yields hovering around $218. Immediate resistance sits firmly at $222, which has capped recent rallies. Key support to watch is at $214, a breakdown below that could open the door to $208. So small cap bulls need to defend this floor. Switching gears to crypto. Bitcoin is battling macro headwinds, trading around $78,000. Resistance is stacked thick between $80,000 and $82,000, where sellers have repeatedly shut down breakout attempts. On the downside, key support holds firm at $76,000, with a major institutional demand zone down at $73,500. Ethereum continues to shadow Bitcoin's lead, hovering around $2,650. ETH faces major overhead resistance at $2,800, which aligns with its 200-day moving average. If the bulls can push past that, $3,000 is back on the radar. On the flip side, support sits at $2,500, with secondary support at $2,400. Across the altcoin landscape, performance remains highly selective. High beta layer 1s and AI-themed tokens saw modest bounces following NVIDIA's earnings beat, but total altcoin market cap is still ranging. Investors are exercising caution until Bitcoin settles into a definitive breakout pattern. To wrap it up, market sentiment is balanced on a knife's edge between blowout tech earnings enthusiasm and interest rate anxiety. The bulls have momentum, but macro data is keeping everyone cautious. Tomorrow, all eyes shift directly to Jackson Hole for central bank commentary, along with initial jobless claims and regional manufacturing data. Be ready for potential intraday volatility. If you enjoyed today's recap and want daily stock market updates packed with key technicals and earnings breakdowns, smash that like button and hit subscribe so you never miss an episode. See you tomorrow and happy trading.